Hello everybody, good morning and welcome to the European Session Brief. We're on Thursday the 13th of April 2023. Another rate hikes still on the Fed's mind. Federal Reserve officials appear on track to extend their interest rate hikes when they meet next month. Minutes of last month's policy meeting that came out yesterday showed officials dial back expectations of how high they'll need to raise rates, but still raise their benchmark lending rate by a quarter point. They did so even after hearing from Fed staff advisors that they were forecasting a mild recession later this year. Meanwhile, a key measure of US inflation showed hints of moderating in March, but likely not by enough to dissuade the Fed from a rate hike in May. Few headlines from China, one of them being that SoftBank is moving to sell the majority of its stake in Chinese internet giant Alibaba, according to the Financial Times, the latest sign of a long-time China investors lowering their exposure there. Alibaba shares fell as much as 5.2% in Hong Kong trade today, erasing around $13 billion in market value. China's exports unexpectedly rose in March, the first gain in 6 months in a further positive sign for the economy. Exports jumped 14.8% in US dollar terms last month from a year earlier, beating estimates of a decline. Imports fell 1.4% against a slump expectation of 6.4%. It left a trade surplus of 88.2 billion for China last month. The rebound in exports was a surprise since the early indicators this month seemed to suggest the weakness had continued. European shares are poised for a steady start as traders continue to assess the Fed's policy path. In the Eurozone today, we've got ECB Governing Council member Joachim Nagel taking part in a debate on the global economy at the IMF World Bank meetings. We've got BOE Chief Economist Hugh Pill speaking about the UK economy at a monetary policy at a conference. Got some data which has just come out of the Eurozone over the past 11 minutes or so. I can see here, in fact, you've got the GDP that came out of the UK. That came through at 0.1% growth quarter on quarter, which beats the forecast of 0% in here. So some decent looking GDP numbers coming out of the UK, but unchanged from last month, it must be said. CPI we've just had out of Germany, so we've got CPI which came through as expected on the month on month and year on year, so it's still floating around 1% per month, so not ideal, or just under 1% per month, 7.4% still year on year, so still high, but not beating analyst expectations, and we came throughout the previous as well, so it's not ticking lower just yet in Germany. Manufacturing production data out of the UK as well, but again, that wouldn't consider that market moving. What else have we got out of Europe today? We've got some industrial production data, but that's pretty much it, and I wouldn't say anything is going to be having an impact on price of these markets. So let's have a look at price action. Past 24 hours, interesting wick on the DAX daily bar there, as you can see, daily candle I should say. So that's a typical pin bar reversal signal. If you were to look to trade it, you've got a resistance level, you've tried to break above but you've closed below, you've got the body of the bar below the resistance level, so you know that's not a bad looking spot to be looking at shorts, and maybe if we move back down into the 15,520 area on the DAX. As you can see, there was clear intraday reversal yesterday, so sellers ready to push the market back down to jump on this particular level. The cable is at 124.85. You can see that strong day yesterday. We moved above 124.45, but now is a case of being able to hold above here and extend these gains and push through last week's high. Remember, we had a false breakout of what was that double top high at 124.45. We faded that move. I think that was earlier on in the week. Now we really need to see this market push through there, get through the previous weekly highs and secure a strong daily close above there. Then we can look for this trend to continue to the upside. Otherwise, you know, we're going to be struggling again at this level and looking to fade it back down into this area here of 124.45. The euro has been able to break above its previous weekly high, as you can see, unlike the cable, and now we look set to push into that 110.30 handle. I did post a Bloomberg chart inside the chat room just yesterday, which was this one, which was the spread between the 10-year German and US yields hitting its tightest since July of 2020, helping to support the euro US dollar. So the euro US dollar was inverted here, which is the blue one. So actually, it's just if you flip it around, but you can see that correlation between the two is certainly quite interesting. So that's where we're at on the euro. It's just something to be considering as it storms onwards and upwards towards the 110, sorry, and looking now to get through that current yearly high of its own of 110.31. So that's basically it from my end for the session brief this morning. Anything else, I'll post it inside the chat room. Till next time, all the best with your trading, and bye for now.